So thank you for hopping on. Thank you for hopping on. Well, Chase, let's dive right into it, man, because you're somebody where you came into the insurance space, you came in hot, and I remember at when we were at Connor Green's house, working out of his house
Yeah.
about a year and a half ago, and I was like, this guy's gonna be something, and this guy's gonna be he's gonna be a big deal in Pinnacle, and he's gonna be a big producer, and sure enough, you're making some big moves and you're doing some big things. So I'm excited to get into it. But first of all, Chase, just introduce yourself and tell us how long you've been here for those that don't know.
Yeah, guys. So I was in a little bit of backstory. I was in solar for about 3 years, did door to door for a long time. And I got into insurance strictly for the virtual side of things because I wanted just to work online. I was tired of knocking doors. It was like, how can we make money without having to live in the state that I wanted to work at? I didn't like living in Texas. That sucked for me. So then I started doing virtual about a year and a half ago and started with a different organization. Met up with Jonah, met up with Connor. We ended up switching everything over with Mikey. And then we had a team we were building for a long time. And then I met Spencer. You guys probably all know Spencer Fagioni. Awesome dude, a little bit of a character. And he told me about annuities. He was like, dude, you can make 7, 8, 10, 5 grand per deal. And I was like, this reminds me of solar. And that was like my thought process. I'm like, dude, I remember going and I was being able to knock a door and leave the house like 7 grand like 2 weeks later. I was like, this is something that I'm passionate about. Let's figure this out. So earlier in February is when I really started, like really trying to figure it out this year. And last year I did pretty well in life insurance. Sold, made a little bit over 6 figures, was happy with the results, especially just starting off with the new industry. And I was like, let's try to like ramp this up a little bit. So in February, I started learning annuities, started getting into it. And I was like, it seems like there's this like dissonance between life insurance and annuities, and I wanted to kind of close that gap. So I was trying to figure out the ways that all these different products kind of relate to the customers that we're serving. And a lot of times I found that it's simply in the process, if we just implement a few extra like steps and things, we're able to discover money that would just be going to someone else's pockets if we didn't ask those questions. So then from now, I've done a little over 2.2 million since February this year in just like premium. So that would be dollars from that was in someone's 401k or cash that was put into annuities. It's right around 2.1, 2.2. And that was kind of my transition starting off, Jonah, with getting into annuities this year. So
How hard would you say the learning curve is?
it's not hard. It just takes a lot of, there's like, as you know, there's a lot of people that sell life insurance. There's not as many that sell annuities. So figuring out how to not repeat the stuff that, we say it all the time. I'm trying to think of the best way to phrase this. We say it all the time where it's like you can either learn the hard way or learn through other people's past experience. And there's not as many people in the annuities space that will show you what is a failure and what to avoid in order to sell a bunch of annuities. You get what I'm saying? So I would say like that's the only hard part versus life insurance is that you got to just kind of figure it out in a little bit. And that's one thing we're working on building out with the advanced market team is really trying to help shorten that learning curve. But for me, it took about a month and a half to really feel comfortable. So the first one I sold was end of February. I started learning it in January. And Spencer, I can't take credit for this. He told me, he was like, the number one thing you got to do is prove to yourself that people have annuity money. Because a lot of people aren't setting annuity appointments because they don't know if annuity money even exists. They hear it, they see it, people post big checks. You're like, if until it hits your bank account, you don't know it's real. Let's be real. Until it hits the bank account, you see 7 grand going from an annuity, you don't really think it's possible. And I was like, okay. So I found $1 million worth of annuity money in January and did nothing with it. I said a few for David Pyle, the old guy that was the annuity expert here for a long time. I said a few for him and they didn't close. And I was like, well, this is exactly what I needed because now I know that this exists. I was like, I found $1 million in 1 month of just asking questions and finding money. And that really helped me, believe it was real. And I think that's the very first important step to do in order to getting into annuities. Does that make sense?
Yeah, yeah, for sure. And you're exactly right. There's less people selling it, and it's not talked about as much. And there's less information out there. What is there any helpful information tools or training videos, books, anything you found that's helped you learn more about annuities?
It's a good question. YouTube, there's surprisingly a lot of resources on YouTube. So if you just look up, I think it's not necessarily the product. People always like they overcomplicate the product. The annuity is the easiest thing to learn. You put money into an account that protects it from loss. It grows when the markets go up. It stays the same when the markets go down. And you can create an income or you can create a deferred growth account. Like it's nothing too complicated with the product. The thing that was the complicated part is how do you articulate that to the client? So I think a lot of people get tripped up with how hard it is to sell. It's not hard to sell. It's how do you sell it? How do you get into the questions in order to uncover pain, in order for a client to feel like, hey, I need this instead of like this guy's trying to sell me this. That's the hard part. And YouTube goes over there's a lot of good people on YouTube that has that stuff on there, along with some resources. Like I built out selfishly for myself, I built out like everything that I was going through. I put it into a Google Doc and it was just like just straight autism, to put it that way. It was just everything. It was like 20 different sheets. I was like, all right, this is everything I need to know, and let's condense this. And that's kind of where that sheet I sent to you, Jonah, where it has like scripts, it has analogies, it has everything that you could ever need to pull out of the toolbox in order to get someone to feel like they need a product that you're providing for them, is what that Google Doc does. And there's one guy, I can't think of his name. His name's Roy Snar. If you guys want to write that down, Roy Snar, he's really, really good at teaching one-liners for annuities too on YouTube.
Roy Snar.
Yeah, Roy Snar, he's good. He runs a big annuity company in Georgia, I think. But he's good.
Nice.
Yeah, he's good.
Nice. Okay. And based on that, just the numbers you found so far, how many presentations, how many closes, phone calls, how many times per week? What do the numbers look like of just finding annuities and booking annuity appointments?
I would say is 90% of people in here doing aged or fresh? What type of
Aged.
aged? Okay. So I would say 75% of my closed deals have came from Gil Simmons, not from him specifically, but from his deals that he set to me, 75% of those all from aged. And I've found more money in age data than I have in fresh data. I dial fresh mortgage and I found less money myself dialing fresh than I did from my agents that set annuity appointments from age data. Like there's way more annuity money in age data because I don't know, there's higher quality because they're mailers most of the time, right?
And more older people are more likely to fill out a mailer.
Yeah, exactly. Yeah, it's just the perfect clientele and they're willing to learn. That's why they're like anybody, you're not willing to learn, or let me put it this way. You're not willing to learn if you're willing to mail in something asking for someone to call you. So like all these people are very like willing to like listen to you and see like what can you provide essentially versus like online ad. It gives you an easy out. But
Yeah.
do you want to take like actual numbers? I would say if you're dialing, we do the Ryan Koski percentage model. That's how we track for our KPIs. It's 100%, and you do like different percentages based on how much you dial. If you hit 500% in a week, which is equated to about 200 dials a day, roughly 2 to 300, depending on how many appointments you set. From that, you should be able to, from 10 deals you close, you should be able to set 3 annuity appointments from every 10 deals that you sell. And then from that, one of those 10 will actually convert. That's the numbers I've seen. 1 to 2.
So about one out of every three.
Yeah,
So you sell 3, and set 1 annuity appointment from that.
essentially.
Okay. Closes.
Yeah.
What about presentations? Where how many times is it rare or is it somewhat frequent? You present to somebody, they don't buy the life insurance, you book the annuity.
It's actually interesting. A lot of my first deals came from cross sells from my own book. So I would discover money, but I still was rusty on how to convert it to my own appointment because I didn't necessarily know everything about the annuity. So I was kind of just like testing, running presentations with my own deals. I didn't want to take appointments from people and then not be able to like close it. I felt that was selfish. So I was like, let me try to set my own, run my own. That KPI was a lot higher. Now, from the actual presentation standpoint, from Gil, I'm trying to think the best way to put this. What was your question? I just had a brain fart. I was like thinking.
No, you're good. So what percentage of your closes would be from deals you've, or what percent of annuity appointments would be from deals you've closed versus just people that you presented to that you weren't able to close, but you were able to convert that into an annuity appointment?
Okay, I see. So it's a lot of the annuities that I've closed from appointments have been people who don't qualify or don't need life insurance. So like for
Oh, so
example,
most of them.
yeah, a
Hmm.
lot of them are that. And it's a way you tee up, and we'll get into the technical in a second because I feel like that's what a lot of you guys want to see is the technical details of how you can phrase this in your financial inventory to find and uncover annuity money without becoming too salesy. That's like the most important thing. And I've taught Gil this really well, and that's why he's been paid out. Like he got paid 20 grand last month from annuities, just from splits. And all those were from age data. He goes through, does his intro, does the financial inventory, and then he immediately says, this person's not good for life insurance, but he finds money, and then he either will live transfer it to me right there, or he'll pitch it and set an appointment. And a lot of those close. Like we've had, I would say probably one of his seven that I've closed seven of his, one of those has ever been his client, and that one decided to back out. So it's literally just the people for him. It's the people who haven't bought life insurance. They're annuity clients sometimes. Now
Nice.
don't mistake in that because a lot of my personal deals have been from people I've sold. So
Heard. Okay. What are the track words you're using to find these?
this is the fun stuff. Can I share my screen on here so then I can show?
Yes. Claudia, can you allow him to share his screen?
Yeah, you should be able to.
Okay. So is that, can you guys see that?
Yes.
Okay. So I'm not going to go over like everything because there's a bunch of stuff on here, but for the first part, this is something like if you guys still don't know what an annuity is and you don't just want to go and do a bunch of research on YouTube, you can go here. And I built this out specifically because people are scared to talk about things they don't know a lot about because they don't want to look stupid. That's like in front of the client. So if you read through this, this will give you a bunch of different word tracks that you can look at of like explaining what is an annuity if you get like a technical engineer type of client. So I would read through this in your free time. I'll send it over. You guys can look at it. This also shows you who is like the ideal client. Because a lot of times we don't know who the ideal client is if you don't know, if you never set annuity appointments, you don't know who an ideal client is. So right here, this is something you guys can go through and see all the details about what's an annuity, who's an ideal client. And then this is the fun stuff. And this is the one-liners. This is the stuff that you can utilize in the financial inventory. And I have it set up where you use two keywords. So the keywords is self-funded pension plan. It doesn't matter like if you're doing an income annuity, if you're doing a growth annuity, it doesn't matter what you do. You say self-funded pension plan every time. And the simple reason why you do that is because everybody knows what a pension is. You want to relate it to something that they know, so then they don't think it's a new thing. And that's how you can easily set a lot of appointments is if you really tie down these meetings to something that people already think exists, like a pension, right? It's like, why haven't you converted your 401k to a pension? A lot of times they're going to be like, what do you mean? Because we came up with that type of word track. It's not something that's like standardized. People are like, what do you mean? You can do that? I'm like, yeah, everyone does that. Everyone converts their 401k to a pension. And they're like, well, how do you do that? Well, I'm not an expert on it, but I do have someone on our team that is an expert. Or if you want to close it yourself, yeah, I'd be happy to share that with you. The key word right here is remind me at the end of our call so then I can show you a few things and send you over some information on how you can create a lifetime income. So when they want more information, you always say, remind me at the end of this call to go over it. Because then if you attack the money too hard with annuities, it's not like life insurance where you want to tie down the pain, like right when they tell you, yeah, if I die tomorrow, my wife is pretty screwed. You kind of go after that with life insurance. With this, it's very different to where they're like, yeah, I have, why haven't you created a pension? And they're like, oh, well, what do you mean by that? You don't want to give away the ammo. You want to allow the rest of the sale to be where you can build more rapport, you can get closer to the client, and then you're like, you mentioned earlier that you had that 401k and you were curious about that pension, weren't you? Okay. Would it help you if I set up a call with our team so then they can go over the details on how to create a self-funded pension plan? And then now they're like, yeah, that would be really helpful. And now they're asking you, right? And that's how I do. I do it through a three-step process, which we'll get into right now. Does that all make sense? Everyone following? Okay. I,
Yep.
I ramble a lot. That's a thing of me. So if I ramble and you guys want me to slow down a little bit, just let me know and I'll go back and I'll cover some stuff. But here we go. So first part is, are you more of a spender or a saver? This is something that Jesse always talks on, spender, saver. It's a good question to ask. I don't say this every time. This just depends on how, if you ask this question already, definitely do it. If you don't, it's not the end of the world. You don't need to say, are you a spender or saver every time to set an annuity appointment. It does help you understand their finances though. If you're like me with mortgage protection, I don't ask spender saver. I kind of like if your income, when you're in the income part, so you're like, how much do you make in income? How much do you spend in expenses? Would you say you're comfortable at the end of every month or is it a little bit tight? That's kind of how I go over that spender saver question. And then right after the income, you get into now, John, now, Jonah, let's say something happened to you yesterday. What assets would your family inherit that could act as life insurance? The reason I like this question is because if you say, do you have a 401k? Do you have 100, $200,000 that your family, would get from savings account? People get a little defensive because you're asking them about their personal finances. But if you say it this way, now let's say something happened to you yesterday. What assets would your family inherit that could act as life insurance? This right here allows them to think that you're asking because of the life insurance. And they're gonna be like, oh, we have a 401k. IRA, stocks, bonds, or big savings. You're like, okay, great. Now, just to make sure, Jonah, that we don't overinsure you, this is the big line. If you just to make sure we don't overinsure you on the mortgage protection, do you know the ballpark values of those accounts? So if
Mm,
someone's like, if you ask someone completely different question, you're like, how much do you have in your 401k? They're going to get defensive. If you say, just to make sure we don't overinsure you, Jonah, how much do you have in that account, you know, for the mortgage protection? And then they'll be like, oh, we have like 200,000 in there.
money,
Yeah.
money.
Then you get into now that you discover the money, don't get jumpy too quick. So this is kind of reminder, hey, don't be like, okay, what about a pension fund? Have you ever heard about an annuity? Like you don't do none of that. You pause, you continue to go through the financial inventory. Then you bring up, okay, Jonah, well, great. Well, I know you mentioned that you had a 401k. What's your current game plan if the markets tank again? Do you just ride it out or and that right there, that statement question, this is something I've been really testing a lot lately, is ending in statements that you can pause and then it makes them elaborate because there's not like a yes or no question to it. So like if you say something like, I'll repeat it how to say it with a tonality. It's okay, great. Well, I know you mentioned you had a 401k, Jonah. What's your current game plan if the market tanks again? Do you just ride it out or and then you kind of do a little higher tone at the end? And then they're like, well, we don't know, yeah, I'm just gonna let it sit, or I like they'll really elaborate their problem to you. So then you can dive deep on their direct problem. Once you do that, then you go, well, 90% of the families, this is like establishing authority in yourself. Well, 90% of the families I work with are tired of seeing 10 years of growth wiped out in 10 weeks, like in 2008. It's not about fear, it's about knowing what you can't afford to guess on. Has anyone walked you through how to take guaranteed lifetime income from it without cannibalizing the account? Do you see why
Mm.
this is important right here? Anybody have any questions about this? Because I just kind of went over all this. I just want to make sure there's no questions. Can't see the chat if there is. Let me look at the chat.
I've got one.
Okay.
What would you, Chase? What do you say is the biggest pain point you see that you normally hit on when first presenting an annuity?
Presenting or setting an annuity appointment because they're different.
Both.
I would say so the biggest problem I've seen is a lot of people will have financial advisors, but the problem with financial advisors is they're focused on keeping you happy today. They're not focused on your income strategy 10 years from now. Like there's very rarely a person that in their life that will come to them and show them a strategy on how they can withdraw assets from their account without cannibalizing it. That's why I really like this one-liner is because you need to isolate yourself within their portfolio without them thinking you're trying to replace their financial advisor. So the biggest problem I see is that they don't have someone in their corner that will show them how they can take income from it without worrying about taxes, without worrying about money going down. So the uncertainty behind their income plan is really the number one pain, is they don't have anybody in their corner that helps them set up an income strategy for retirement. If we're talking about the average day person, there are anomalies like the guys who have 2 million in their 401k. You have to approach that differently because they know they have more assets that can last them. But if you're talking to the average person, which is, the average annuity is 140,000. If you're talking to the average person, they don't know how much they can take out of that without it, running out of it in retirement. So I guess to answer your question simply, Jonah, it would be knowing how they can take money out of it without running out of it. How much
Yeah.
money can you take, without having to have the fear of losing everything, you know?
Yeah. That makes sense. Well, that leads me to my second. What I was going to ask you, I'm glad you brought that up, is when you do run into people where they say, yeah, this all sounds great, Chase, but let me run this by my financial advisor, see what his thoughts are. What do you say to that?
This is in a meeting, I'm assuming, right?
It can either be in a meeting or first booking the appointment. Is your response different?
So you've heard the problem. The reason I'm asking that is because I never get that when I'm setting an appointment. Like I've never had that ever come up on setting an appointment. I've had that in appointments. Now, I think that's one thing when we run these annuity trainings, a lot of times we provide too much information to where now you're asking and telling too much to where people have more concerns and questions. And that's the one thing we got to, like, if you're trying to run your own annuities and close your own annuities, you bring it up, but you have to be willing to take that objection. Now, if you're just wanting to set to make a few extra, like 5, 10 grand a month just by setting annuities, you're never going to get that because you want to be a little bit more ambiguous in how you're speaking. That's why you're bringing up these questions that I'm reviewing. Now, if someone said, "Yeah, Chase, that was great. Let me just talk to my financial advisor," I would say something like, "I think that's a smart idea because I'm not trying to coach the team, Jonah. I'm not trying to come in and change up your game plan. I just want to sit on the bench so I can show you how we can, maybe get a few home runs and guarantee your family has income in retirement." Now, if you don't mind me asking, Jonah, what when's the last time your financial advisor has reviewed a strategy for income planning, or does he just show you profit and loss?
He just shows me P&Ls.
Okay. Well, what are you going to do for income for you and your wife then?
We haven't really talked about it.
Okay. And it sounds stupid because usually you get another objection right there, but it's like a lot, like I would say 80% of times that's exactly how people respond. Like
Hmm.
like you do these trainings, it seems like it's like a silly thing to say back. You think you'd get more objections like from left field. Like you really don't, to be honest with you, because a lot of people don't like talking about their finances. Like a lot of like friends, family at dinner table, they don't talk about their finances. It's very private. So people are just they don't know about it. That's why annuities are so cool to set, is because it's not like, what life insurance do you have? Like it's you know what I mean? People don't really talk about their finances because they're very insecure about it, especially if they don't have millions of dollars in their 401k. So just by
Yeah.
asking and uncovering the pain, which is what is your income plan? If you really dive deep on that, like how are you going to guarantee you don't outlive your money? And you stick to your gun on that. Don't go off on left field like, well, your financial advisor, it's better performance, rate of return. Like we don't ever get into any of that stuff at all. It's like, what is your income plan in retirement? Okay, if the market was to collapse the same as it did in 2008, how exposed are you financially? Has anybody reviewed that with you? And then you just try to get a seat. Like the reason I use that analogy about like I'm not trying to coach the team. I just want to, sit on the bench and help you with the income strategy. Like that is because I try to incorporate like we're a team. Like I try to make it seem that like we're all work together. Financial advisors, they help you grow your money, they help you build it in the accumulation stage of your life. This is a big analogy I like to use where you talk about accumulation stage versus preservation stage in retirement. So if you are, I'll role play it with you for a second, Jonah. So
Okay.
I would say, hey, Jonah, so I just want to fill you in a little bit about what we do. There's two stages of life. So there's the accumulation stage, and then there's the preservation and distribution stage. Now, the accumulation stage, Jonah, is, think 25 years old, just starting the workforce. 55, you're kind of ready to get out of it, right? That's the accumulation stage. We're trying to build up as much money as we possibly can. Now, the preservation stage, can you guess what that is? And then
That's where we are preserving our wealth, the money we
exactly,
built
you
up.
want to make sure that you and your family and your legacy doesn't outlive the wealth that you've built in that time period of accumulating it. So what we do here is we help people transition from that accumulation growth stage to the preservation and distribution. Now, as you know, Jonah, you've probably seen taxes go up since you started out working. The
Oh yeah,
preservation stage is not only important because it protects your money from loss, but it also solves the equation of how you're going to take money out of it without running out of it. Now, do you have a plan in place? Has your financial advisor ever went over how you can take money out of your account without cannibalizing the growth?
no, he hasn't.
And that's kind of how I separate the two. Because if you leave it, people they assume they just need one financial advisor for their whole retirement. They really want someone to come up with a plan on how they're never going to run out of money. Because the pain of being broke is worse than the pain of dying. That's a study that's been done. If you look it up, it's on Google. I think it was Harvard. They did a study where 90% of retirees are more worried about running out of money than actually dying, which is crazy.
The pain of being broke is greater than the pain of dying.
Yes, it is Harvard study. It's nuts. Now,
That's good. But Chase, I'll let you keep flowing with it because I don't want to go too off track. So go through your thing, and then at the end of this, I want to give you a few annuity objections.
cool. Sounds good. Now, I saw on the chat, it says, what if they have a pension already? Will an annuity still be a good fit? Yes, so the pension is something that is usually through like an employer, a state or federal government. If they have a pension already, chances are, if they have a pension they're already taking money out of, chances are we can't touch it. Like if they work as a firefighter, they retire, their pension's already taken money out, you can't really touch that money. Now, the real thing is increasing their lifetime wealth is what we call it. So increasing how much guaranteed income they have. Because when you're retiring, you're not worried about, active income, you're worried about lifetime income. How much money is going to stay with you forever so you don't run out of it. So that's kind of the equation we're solving as we go over, like if you want to think of it like life insurance, you're trying to figure out how much can they afford to spend on life insurance without, going broke or lapsing on the policy so then they can protect their family. Same kind of thing here. We're trying to figure out how much assets they have that will help them convert to a lifetime income so they don't run out of it. Same kind of concept. Now, let's see where we're at on this Google Doc. Okay. Now, I would say there's three phases to this. So you have the when you're introducing yourself, this is a little bit of a backtrack, but when you're introducing yourself on like an insurance call, I stop saying I'm a life insurance agent. I say I'm an asset protection specialist. So instead of saying medical underwriter, I started saying asset protection specialist because this allows me to pre-frame early on in the call to where people can ask about it. And then it doesn't tie me down to being like, I'm just the insurance agent. So I'll be like, my name is William. I'm an asset protection specialist. We help families make sure that anything they have as far as assets, like your mortgage, is protected. And then you kind of leave it at that. Like you want to drop little hints throughout the call. Once you go into the financial inventory, that's where a lot of the annuity discovery is done. First thing you do is you want to figure out if they have an account. That's the number one goal. If they have a retirement account. And that's kind of what this question that we went over already covers is now, Jonah, let's say something happened to you yesterday. What assets would your family inherit that could act as life insurance? 401k, IRA, stocks, bonds, big savings. Then if they say IRA, you write down in your financial inventory, you're like, they have an IRA. You don't ask about it. You continue on with your process. And then towards the end of the financial inventory, you bring it up again. Now, just to make sure we don't overinsure you, on the mortgage protection, do you know how ballpark what the values are on those account? And they tell you the number. You write that down. You continue on with your process. And then now towards the end, you're like, okay, well, I know you mentioned this. What is your current game plan? Like you're curious. You want to hit them with a curious tone. Like, what, what are you, what is your plan to make sure you don't ruin your account? I'm curious. Like, has anybody ever like looked at that, or did you just write it out? Or, and then that allows them to kind of like talk to you about it. And then now like you don't have to come in as the expert. you're coming in as the problem solver. That's the goal of this annuity script is you want to come in as the problem solver, not the expert. Now, once you go through, I've already read through these. Once you go down, this is if you want to set appointments we're about to go through. So if you look at, okay, where are we at? Let me read this. Has anybody ever walked you through how to take guaranteed lifetime income without it cannibalizing your account? They might say something like, yeah, our financial advisor already did. Chances are they didn't, so don't get sold on that lie. Buyers are liars. If they say yes, though, you say, that's awesome. Remind me at the end of this call to send you over some information regarding the self-funded pension plans. I'm not an expert on this, but we have an awesome retirement team. If they say no, they're saying no to, has anybody ever reviewed how to cannibalize your account or how to generate lifetime income without cannibalizing your account? If they say no, this is when you go for the close in the appointment. If they say no, you might as well just go for the closing appointment. That's what I do. And I would be like, you're not alone. We're all conditioned to just focus on accumulation, not distribution. But distribution is where everything breaks if you don't do it right. Well, I think it would be a little bit weird if I potentially knew another way to help you and didn't mention it. Wouldn't you agree? I'll probably say something at the end, like, wouldn't you agree? Like, yeah, it'd be a little weird if you knew another way to help me, didn't mention it. Okay. Well, even though I just said that, well, wouldn't it be weird if I knew a way to help you? Now I'm building their curiosity. This is the thing that I love the most is I push off the interest until the end. So remind me at the end of this call to go over self-funded pension plans. Our firm has an awesome retirement planning specialist named William, who does a lot of these for our clients, and that's basically just teeing up the appointment. You guys get the gist of that. But remind me at the end of this call is the best way to push off any objections so you don't get it. So that, remember you asked me earlier, Jonah, you're like, what would you do if you were setting an appointment and they said financial advisor? Like, I don't get that because I'm
Yeah.
always pushing it off. I'm pushing it off the actual appointment. So there's really no sales resistance on that, right? Because you're slowly getting them to trust you, slowly getting them to trust you. And then remind me in the call to go over self-funded pension plan. At the end of your sales presentation, you have more trust naturally because you've been on the phone with them for an hour or so,
Mm.
Pain building.
Claudia asked a great question. She said, are you going by William in your annuities to sound more professional?
Oh, 100%. Yeah,
For
definitely.
sure.
I think William sounds way more professional. So I go with it.
I agree. That's a funny question. All right.
Here, I'll send this in the chat real quick.
Yeah, this is some sauce. I'm gonna have to go through this myself. Thank you for sharing this.
Yeah, no problem. That's why, like, honestly, like I like to do these trainings, but I like just to read off this because this is what works. It seems like I'm just reading the script, but like it's literally that's what's beautiful about scripts is that you can just literally read it and just plug and play where you need to do. And the goal of this training is to show you guys why I say certain things. Because if you don't know why I'm saying it, then you might replace it because you already have a script you use, right? So I think it's important to know why I say certain things so you can understand the psychology behind it.
1000%. Yep.
Now, pain building. This is somebody who acts like their 401k is the best thing since sliced bread. They don't really want to talk to you about it. They're kind of just being like an asshole. And you're like, oh, have you ever taken a loss in that account? How did it make you feel? Can I just be completely honest with you? Like it allows you to have that perspective. So then you can say, sure, why not? Tell me what you think. Well, if you woke up tomorrow and opened your phone, and instead of 100,000 inside your 401k account, there was 40% less in that account. I mean, how many more years would you have to keep working to financially recover? Right? Painting for a picture of, what it would look like if they lost 40%.
Chase, can I stop you there? Could you
Go
say
ahead.
that one more time, but say it with the exact tonality and pacing that you use when communicating with the client?
Gotcha. Well, Jonah, if you woke up this morning and opened your phone, and instead of $100,000 in your 401k account, there was 40% less, how many more years would you have to keep working to financially recover?
At least 10.
Gotcha. Well, I'm not sure if this is something that would, even help you out or not, but we have a dedicated retirement strategies team that's specifically self-funded pension plans, which essentially allows you to participate in the upsides of the market with 0% downside risk. So, Jonah, what I can do for you is set you up for a quick 5 to 10 minute discovery call with our asset protection specialist to quickly review what you have going on now versus, where you feel like you want to be at to have peace of mind in retirement and see if we can even help bridge that gap. Does that sound fair?
That sounds
And
fair.
that's kind of the hail. This one doesn't always work because this is the pain voting, right? This is people who are kind of an asshole, kind of standoffish, but you will get some people that are like, fine, yeah, why not? And then that's the ones you want. And those are the ones that when you tee it up, it's so funny because I'll get a lot of annuity appointments and they're like, this guy's an asshole. I'll see in the notes, like, this guy's an asshole. He doesn't want to, he didn't want to tell me his numbers, but they get on a call with a retirement specialist. And it's the reason why you're framing it that way. Like, because now their ego drops because they feel like they're not talking to a life insurance person that cold called them. They're like, oh, I'm actually talking to a retirement team. And that's why, that makes it us easier because they're like, their ego goes down. They already were kind of bought into the pain a little bit, but they just didn't want to tell you. But they'll tell me. And that's kind of how you
Mm,
play the setter side of it. Like it's not bad to set annuity appointments. Like I'd love to make solo annuity commission, don't get me wrong. But setting it, you get paid, you don't do anything. So it's not a bad strategy to do either.
not bad at all.
And then post-sale setting, less friction and easier for new agents. Let's go through this. Oh yeah, so this is important here. So I was just catching up on what this was. So post-sale setting, the reason this is important is let's say you want to wait until the end of your excuse me, you want to wait till the end of your life insurance deal to bring up the annuity. Remember I said, remind me at the end, how I always say that? This is what you would say at the end. Well, Jonah, now that we have the mortgage protection covered, I wanted to mention one more thing. You had previously mentioned a 401k, right? Okay.
Yep.
Okay, so I feel like it would be a little weird if I didn't, tell you, but our firm, we do have a retirement specialist that meets with our existing clients to make sure that your retirement is protected the same way we just protected your mortgage. Now, it's a free 10-minute consultation. It's already included with your mortgage protection. What time tomorrow would be best for our head advisor, William, to give you a call? Again, it's just a quick conversation to see if we can even help. No pressure.
That's genius. I love that. Where you're saying that you're basically you're going along with it like it's a normal process. Like this
Mhm.
is just normal, free. It's what we do with everybody, and then you're just option closing them. You're not even asking them, do you want to meet with somebody? It's hey, what time works best?
Mhm.
Got this time or this time. Boom.
Yep. And people like free stuff. Like I say, like we always say, quote, quote, quote is bad. Like you don't ever want to say you're the quote guy. But when you're talking about retirement, sometimes you got to say, oh, yeah, it's just a quick discovery call. Like it might not even make sense. Like he'll just send you some information for some quotes. Because then people have less friction. They don't think it's a big commitment. Because they don't want to look how fucked they are in their retirement. People don't want to know
Yeah,
how hard that is. So yeah, it's more of a quote thing, how I would set. And that's why I like this one a lot. And then what is this one? Here's what I say after presenting equity protection that doesn't make sense for the client annuity pitch. So being self-insurable is good. The problem is that it's tougher sometimes to close these. So just for you guys to have realistic expectations, self-insurable plans is probably the hardest annuity to close because we're talking about repositioning their assets to pay off a death benefit. And a lot of times people are weird about that because they're using it to pay income. You know what I mean? But it does work. And I have closed some with this. And it's not a bad idea if you run into people that have assets that would, you know, maybe not want, $300 payment for $15,000 of coverage because they have 200 grand in the bank. Then you might be like, hey, Jonah, you know what? You might qualify as what we call self-insurable. And then I would pull out some of the other one-liners in this, and it would be like, now I'm not the expert in that, so I don't do the self-insurable plans, but we have a retirement team that handles this. It's more of an estate planning product, and he can talk to you because and then you want to emphasize how good he is, just because you're way more financially savvy than a lot of the people we work with. So I can send you off to our financial team, and they can show you how to become self-insurable. And then they're like, oh yeah, I am. I'm that man. I got all that 200 grand in the bank. And then you tee it up for us, and then we go through how they can utilize an annuity. to basically act as a death benefit.
Yeah, that's important. And you guys, how your annuity appointment's going to go, especially the beginning portion, is entirely about how much you tee it up to the expert. So make sure you butter up the client, make the client feel good. Hey, you've made some great financial decisions. We're going to look at another option. This is logically another good decision. I'm going to tee you up to Chase. Chase is our annuity expert. He's been doing this a long time. He's really good at what he does, and he's going to lay out some great plans for you guys. You guys are going to absolutely love Chase or whatever it is. And then tee him up, you butter up the client, and then that's how you make it a smooth transition to sauce it over to Chase.
Yep. These, what's cool, but there's a product with Athene. This is why I put this one first, is because if you don't know what an annuity is, you're going to be like, what does self-insurable mean? How does that work? Like, they have a death benefit? What is an annuity, right? Because then you won't feel confident on what it even is. So that's what I'm saying. If you guys don't know how people are using annuities as a self-insurable like vessel, you should read through this and look into how can someone use an annuity as a death benefit. Just Google it. It'll pop right up. It's not hard. And then once you get an idea of how people do it, when you say these one-liners, now you have confidence in how you're saying it because you know it's possible. Now I'll fill you guys in. There's a product that gives them a 50% bonus on whatever assets they put in that will pay out as a death benefit. They don't have to use health. So like I just got off a call with a guy who I was going to replace his annuity, but it didn't work out because he had too big of a penalty to move his money. So we couldn't move it or it wouldn't have worked. Like suitability wouldn't have approved it. So he had another 100 grand in a CD. And I was like, well, seems like your wife would be a little bit tough financially if you passed away, right, Richard? And he's like, yeah. I'm like, what if we just allocated a portion of your existing assets into something that would, increase the money value day one. So then if you were to die tomorrow, she's getting more than what you have in the CD. Because let's be real, Jonah, the CD is not growing. What's it, 3%? And he's like, yeah. I'm like, well, I can show you something that will give you a 50% death benefit bonus day one. So you put in 50,000, you're going to get a $25,000 day one bonus. And if you were to die, the only caveat is that she would receive the 50,000 plus that $25,000 bonus over a 5-year window, which, Jonah, seems like that's enough money to make sure your wife can stay in the home. Wouldn't you agree?
I agree.
And then that's how I closed this guy on this annuity a second ago, was just doing that. And that's a 50% bonus day one. And it's just repositioning a CD account with low interest into something like this. It gives them a big bonus and they don't have to pay a monthly payment. Pretty cool stuff.
Boom.
Yeah.
Chase, question
Okay.
on suitability. How much time do you spend getting annuities pushed through suitability and the underwriting process there?
Suitability is relatively easy. The harder part is transferring the funds. So like if anybody on here wants to start selling their own annuities, it's gonna like the first month to 2 months is gonna suck because you need to know how Charles Schwab sends money to Athene. You need to know how Morgan Stanley sends money to Athene. What are their processes? What forms do they require in order for them to transfer the funds? So like my first few annuities took me a month and a half to get funded on because I was stubborn. I was just like, I'm going to figure this out. And then I kind of got the hang of it like 2 months in after transferring funds. I'm like, okay, I already know Charles Schwab. They need a form. Let's go ahead and call the client while I got them on the line, get the form, tell them we're good, and the funds transfer a lot faster. So that's the longest part of the annuity process is getting the SOPs, the standard operating procedures back from all these different financial organizations that hold retirement accounts.
Yeah. Do you ever pitch that as a bonus to the client where if they're giving you pushback, say, hey John, in order to you do have to get approved on this. And in order to even get through suitability, this has to put you in a better financial position than what you're currently in. If this puts you in a worse position than what you're currently in now, they're just going to decline it.
Yeah, I do say that. I say that before. That's like a pre-frame I use to make sure they don't think that they can just get this whenever they want.
Yeah.
Yeah, suitability. I've even experimented adding that word track. It works so well. I started doing that in life insurance. I started saying suitability instead of approved. Like if you're not suitable for this product, they don't think this is going to be something that's going to benefit your family. You can't even get this. Like
Mm,
it works so good. It's crazy how good that works. But
that is really good. Is that exactly how you say it too?
yes, yes.
Say
They
that
don't.
one more time.
Yeah. Well, Jonah, I mean, have you ever heard of suitability? They're always going to say no. And I'll be like, well, suitability is basically something they have in insurance to where if your family's not going to benefit from this day one, then you can't even get it. So that's what we're here to figure out if this is something that will benefit your family or not.
Boom. Money.
Yeah. It's beautiful. And it's true with annuities, life insurance. I mean, who can't benefit from a tax-free check? Let's be legit, everyone can. So
For sure.
now one thing that's cool is these analogies. This is one of my favorite things because sometimes you'll get people who you go through this, they're just like the yes people. You know what I mean? Yeah, yeah. I don't know what I'd do if my account went out. Yeah. But then you go to set the appointment, they're like, I don't know. And it's because they don't know what you're talking about. So you can tell they want more information about what the annuity is, but they don't really want to talk to anybody. The analogies come in perfect, but they're like, I don't know. We'll let you know. Well, do you know what I'm talking about, Jonah? They'll be like, no. And then you might say something like, well, Jonah, think of it like creating your own pension. You're using part of your savings to build a guaranteed paycheck. So no matter what the market does, no matter how long you live, you've already done the hard part by saving the money. Now it's about making sure the money behaves like a real income stream. Like these analogies allow you to explain what the product is without explaining it. You don't want to get into guaranteed income, 5% interest, 20% bonus. Like you don't want to say any of that stuff in the beginning first call. That's for the second discovery call. Or even if you want to run your own appointments, you don't want to talk about anything about what the product actually does until you're on the call and they have their financial statement in front of them. Because chances are, a lot of times people will tell you that their accounts are a lot better than they are. And when you first bring this up, they're not going to have their financial statement because they didn't know that we're going to be talking about their finances. So it's silly to talk about pain building questions or direct specific things that they don't even know. You know what I mean? You know what I'm saying? Like if they don't know they lost 5% last month, then they're not going to have that pain to build on because they don't even know.
Yeah. Yeah.
So these analogies really help get those people to the finish line to where we can set an appointment and then have them be prepared for the appointment so we can actually establish real pain, real problems, and then actually sell them the annuity. So with
Mm.
this, the business buyout analogy, this is for logical people. Imagine you build a business for 30 years. Now you want to sell it, Jonah. Would you rather sell it for one lump sum and hope it lasts, or set it up so the business keeps sending you monthly checks for life, even if the economy tanks? That's what this does for your retirement savings. It turns an asset into a system. Casino. This is my favorite for the guys who worked at the Department of Transportation, the people who have, blue collar America, they've worked really hard, but they haven't really looked at their retirement account because it just comes out of their income into a 401k. Let me put it this way. If you had $300,000 sitting in casino chips, would you want to keep gambling at all, or maybe cash in a chunk to make sure that you had a guaranteed check hitting your mailbox for the rest of your life, win or lose? Well, that's what I help people do. I lock in their income before the game turns. Like this right there set a shit ton of
Money.
appointments for me. Like this is beautiful. And
These are amazing. These are so simple too. Anybody, when you phrase it that way, anybody's like, oh, that makes perfect sense. Why would I not do this?
mhm. It's crazy how simple, like this looks like a lot of words. Like that's one reason with scripts, they kind of like, I look at them and I'm like, so many words. I'm like, what am I going to say? The most important thing about this is if someone has a 401k, this is all resources that you can look back and pull from in order to maybe get a few extra deals closed, right? That's why some people do average 20K a month in life. There's guys that do 50s because they go back and they pull the extra details they need out to get those extra deals to the finish line. So this is what this is for, is so you can go back and pull out more annuity appointments, pull out more resources. But the simplicity of it is it's awesome. It's you find the money, you ask the right questions, and you set a call to the specialist or you close it yourself, whatever you want to do. And if someone says they have a 401k, All you have to say is, oh, why haven't you turned that into a pension? You sit there in awkward silence. You sit there. Why haven't you turned it into a pension? They're not going to know what to say because it's not a real thing. But it is a thing they just don't know about because you can create like annuities, income annuities are not called pensions. We call them pensions because they act as a pension. But no one's ever told them that before.
Yeah.
So you just say, why haven't you turned it into a pension? Well, I don't know. Well, what's your plan to make sure you don't cannibalize the account when you start taking income from it? Or did you just put all your money into 401k to never touch it? It's kind of silly. Why'd you build up a retirement account to not ever plan to take money from the retirement account? Doesn't
And
make sense.
it's similar to life insurance where we don't say life insurance because life insurance can sometimes be a dirty word. Same thing with annuities. Sometimes annuities can be a dirty word because a lot of times when you say an annuity, especially to somebody that's in their 60s or 70s, they're thinking of the old school grandfather annuities where it's you get your guaranteed 3%. Well, guaranteed 3% in today's day and age, that's not even enough to outpace inflation.
Yeah. You brought up
So
a good point. I didn't even add that in here. I should probably add that of like why people
yeah,
think these are bad. That's one thing you'll
yeah.
get. If you ever say the annuity word, you'll get people that say annuities are bad. And it's so simple how you can overcome that. It would be, let's say, hit me with the objection, Jonah, so we can give a good role play. I'm
Yeah,
like,
I heard annuities are bad because I only get a 3%.
yeah, you're right. Annuities suck. Or they at least they used to 20 years ago. So you're probably referring about the old ones, aren't you?
Yeah, but also there's variable annuities too, where you can lose your money.
You brought up a good point. There is a bunch of different types of annuities. Now, Jonah, the thing about it, like my grandpa used to have an annuity, and I would tell him not to do it because you tie up all your liquidity. You have no access to it. So if I ever asked you to tie up your money and never touch it again, that'd be kind of silly, wouldn't it?
Yeah,
So what we'll do is these products have changed completely. We'll go over a few different than new products because the past 20 years, I mean, you've seen it. Pensions have gone away. When's the last time you've seen a pension, Jonah? They're all 401ks now, right? Uncle Sam wants to tax you. They don't want you to
it's
have
been
wealth.
a while.
Yeah, so that's why these annuity companies have came out with great products that replaces the federal pension. So we'll go over a few things so we can show you why everyone's doing annuities now.
Gotcha. Let me give you. I'm just gonna leave it in the market because I can get better returns in the market than putting it into here.
I think it's smart to leave some of your money in the market, but have you ever considered leaving a portion of it in something that would never lose? Like what would that do to your portfolio? Have you ever looked at that?
It wouldn't be good.
It wouldn't be good. Can you explain?
Um, well, I wouldn't. I'd lose a lot of my retirement.
I think you misheard me, Jonah. I said, you said, I want to leave my money in the market. And I said, have you considered what it would look like to your performance if you allocated a portion of that money to something that would
Oh,
lose, right? So
I
now they're
haven't
like,
looked at that now.
I've never looked at that. Okay. Well, let me give you this super stupid simple analogy, Jonah. If you have $100 in your account and it goes down 10%, what do you have? 90,
And
right?
then I'd have $90.
Yep, exactly. It's stupid simple, $90. Now, if it goes back up 10%, what do you got?
100.
You would think you would, but 10% of 90 is only $9. So you actually have 99. So if you were to go down 10% on 100,000, now you need to make 11, 12, 13% just to even have a little bit of a profit. Now, most people I talk to, Jonah, they're not willing to have, like, they don't have the time in their life expectancy because you're 50, 67. We know life expectancy married. They don't have the time to have a bad 10 years, to have a good 20 years. Wouldn't you agree?
I'd agree.
So let's look at what earmarking, I love saying earmarking. Let's look at what earmarking a portion of your assets into something that protects you from loss, how that would help with your long-term performance. Does that sound fair?
Sounds fair.
Perfect.
You mentioned the 1%. Do you mention the 1% too? They're paying to their financial advisor. Like your
I
account may be up 2%, but you pay 1%. You're only up 1%, or even if you're negative, you still have to pay 1% to your financial advisor.
I do, but that's like I save that for further in the sales process. So this is objection handling. I save all that stuff for the the oohs and ahs that you'll get when you're presenting. They're like, ooh, I didn't think about that. Wow. Like
Yeah,
that
yeah,
part of the presentation is where I kind of get into fees versus commission. And I'm like, Jonah, remember how we talked about the 10% analogy goes down 10%? Well, it's actually you need 14%. You know why? Because of fees. So advisors charge you fees even if you win or lose. So we need to make sure that regardless of how the market performs, you're never losing. Even if you break even, you're still losing. What gets people too is if you lose 50% of your account, you need to make 100% interest to be back at square one. That's crazy. Like
yeah,
if you explain that to someone and they're like, yeah, it's okay. Like I'm cool with that. Then and if you're 65 years old and you're cool with losing your full retirement account, then you're not my client. I'm sorry. So like I
yeah,
double on the importance of guaranteeing lifetime income like that.
yeah. All right, last we're going over on time, but last rebuttal for you, and then we'll get a break out here. William, I've been working my entire life for my retirement, and I don't know I can trust you.
Well, if a random person called me and they were telling me to move my nest egg over into something that I've never heard of, because you probably, how long have you been working there, Jonah, at your job?
30 years.
You've worked 30 years to build up your account, and you're about to trust someone that you met over the phone to roll over your retirement account. I can understand why you're skeptical of that, right? It
Sure.
sounds and then yes, like sure, yeah, it sounds weird, but then it makes them keep talking a little bit, and they're like, well, yeah, I've been burned in the past, and they tell you more. They tell you why they're burnt. Like they tell you more if you just kind of like disarm it. Like I'm not acknowledging it really. I'm like, yeah, it would be
Hmm.
silly for you to not be nervous. You've worked how long? 30 years? Yeah, 30 years. You've worked 30 years for this. This is your nest egg. We can't play around with this. Sympathize. Can't play around with this. You've been working 30 years for this, Jonah. Now, do you know, like, can I ask you a real question? Do you mind if I be honest with you or blunt with you, Jonah?
No, of course not.
Do you trust a financial advisor who makes $200,000 a year or a company who has 360 billion under management?
Company that has 300 bill.
This is why I love my job, is because I'm not the one trading stocks. I'm not the one guaranteeing anything. I'm just the one that has the cool job of showing you what these companies can do, and then they pay me directly. So your financial advisor might tell you annuities suck. These things are horrible. He's never showed you this before because he wants to keep making his 1% on your money. But I know you might not trust me, but do you think you can't trust a company who has 360 billion? Do you think they really care about your 100,000? Would they put their reputation on the line for that 360 billion? Like this is how hard I get when people hit that. Like I get fucking deep with it. I'm like, do you
Mm.
think they would care about your 100,000? Like they have 360 billion. I'm like, dude, like that
That's a great way to put it. Yeah.
it works. It does work, but that's why
And
closing.
and you can use that with life insurance appointments too.
Yeah,
Use that
it,
with these insurance carriers.
it gets uncomfortable, but that's what happens with these annuity appointments. I hear that all the time. They trust me over the phone. Like I don't do Zoom annuity appointments. You can close over the phone with those too, which is crazy, right?
Really, you do no Zooms.
I've never done a Zoom. I do crank wheel, just like life insurance.
Damn, good for you. Let's go. All
I feel
right,
like,
well, we're over on time, but Chase, William, thank you for hopping on, brother.
yes, sir,
Much appreciated. I'm gonna start calling you William from here on out.
dude. I'm down with it. Sounds formal to me. Sounds like that guy smokes cigars and hangs out at cigar bars.
Sounds
So
like he's got some money.
yeah.
All right, guys, let's make it a week.